All right, stocks narrowly mixed today after a strong rally this week. Markets tend to do well in the final quarter, and third quarter earnings have been strong as inflation seems to be trending lower. We've got Public Ventures President Lou Basenese with us now. Okay, Lou, so you say Americans might not feel great about the economy, but they ought to be making some money in the markets come year end. And you're talking about stocking stuffers.
Yeah,
I think list of stocking stuffers.
I told my kids I need their
they?
Christmas wish list right now. And
right.
I think the stocking stuffers, you have to. You said it rightly. The markets tend to rally at the end of the year and into January, called the January effect. So I think the stocks that perform best and are the most undervalued right now are small and micro cap stocks, particularly biotech stocks. There's a lot of companies that we look at from a patent perspective that are trading essentially for free right now. They're trading, if you liquidated them, the cash that they have on their balance sheet would make them either trading at or below cash. So these are bargains that we haven't seen in decades, really, in this area of the market. So while everyone's focusing on the big caps like NVIDIA, Microsoft, Amazon, Apple, we really got to be looking smaller because that's where really the opportunities are, in our opinion.
The NASDAQ, if you saw that monthly number, is up 10% this month. I mean, that's a huge rally, Lou. So when I think about this, I'm sort of saying to myself, the markets think the Fed is going to cut. Maybe they won't. We may still have an inflation problem on our hands. That core number is still really high. Election optimism, it's definitely out there. I think for 2024, people think we're going to see a change, maybe somebody who can handle this economy better. And also, we're the best house in a bad neighborhood. But is all of that enough to take you, really into the end zone with these markets?
Yeah, it's a great question. I think we're at that last mile with inflation. I think it's going to be really stubborn. So I think the Fed, everyone seems to assume that the Fed's done. I don't think we got the all clear yet. I think we'll get it in December. The Fed maybe has one more hike in December. If they don't hike at the December meeting, it's done. That sets the stage for the markets to really rally. But to your point, the NASDAQ is overstretched. S&P 500 up 15% year to date. If you look at biotech, it's actually down 10% year to date. So again, it's the divergence. When large caps get really, outperform, and small caps underperform, it's like an alligator's mouth. That jaw's got to close.
But Lou, if we got an interest rate hike in December, that would kill the Santa rally, wouldn't it? I mean, people would be like, whoa, I didn't see that coming, and that's not baked into plans.
I think it would freak people out, but that's what we've been doing the whole year, right? Because originally, if you rewind to January, the markets were anticipating cuts in July of this year, and then the Fed had to keep coming back and saying, like, nope, it's not yet, and the markets reacted each time, after they digested it positively. So I think we get one more rate hike possibly. Sets the stage into year end.
Okay.
And we've got a lot of tax loss selling right now that's going to come back and reverse its way out in January.
So it sounds like you're pretty optimistic for a rally here. You're really looking forward to this. But then how do you reconcile with what everyday people are seeing at home? They're still feeling pretty pessimistic. We just heard Grady Trimble's great report. 89% of people are really concerned about what's happening in their kitchens, on the kitchen table, in their pocketbook. What do you say to them?
I think for everyday Americans and everyday investors, you have to make a conscious decision to separate and understand that the market is not the economy. You can have a market to teeter over and go into type of recession. So we're seeing right now labor stress, right? The labor market's starting to cool. Wage growth is cooling. I think there's still inflationary pressures out there, right? We know it's happening, right? Just because inflation's slowing down doesn't mean the prices have come down yet. So at home, we all know that prices are still expensive for everyday items, including gas and food and, even travel and leisure stuff. So,
and even if you are invested in the market in your 401k or your pension or whatever, it's paper money. That's not translating to grocery store money, not at this point in time, too. So there's a disconnect. Lou, it's always good to see you. Thank you.